Hey guys, alrighty. So, a historical day for the market. So, we ended up getting our seventh green day in a row. So, this is officially the longest streak of green since the end of October into the first week of November 2021. And yes, if you remember, November 2021 was what? That was when we hit all-time highs before the bear market started. Now, the interesting thing about that time is we actually had 8 green days in a row, and that was the last time that the markets have seen 8 green days in a row. But the most interesting thing about that is the actual amount that the market has pushed up over this same amount of time, and actually one day less, is almost double what we did in 2021. So in 2021, it was about a $15 push and about a 3.3% move total from the low of the first day to the high of the rally. However, if you look at our rally right now, from low to high, we've actually broke more close over $25 total of movement. And we have had a total of 6% plus movement to the upside already. Now, looking at this here, you can see we have come into our critical pivot point. This double supply at this 436.4 to 436.37. You can see back in June, we broke through it, kind of tested it, and then boom, pushed up. Down here in August, we came down, we bounced off of it before we pushed. And then here, this is where we gapped down through it in September, came back up, rejected it here in October before our massive drop. So the question now is, with a closure over this level, are we going to push to 444.89 demand, or are we going to see a rejection and go back down finally? If we get our 8th green day, we should be looking for somewhere in the 440s. However, if the bears can finally put in a red day, then we have the 50 and the 100 EMA right here. This is the most likely support area, and the 8 EMA likely will be right there. So this 431.4 area should be target. Now, if we look at futures here, same thing. However, we did not quite get to our 44, and I actually need to adjust this. This is off for some reason. So our double supply, there it is. So we actually have a double supply at 4406 and 4417 to 4418. Now, interestingly enough here is on futures, we did not breach that level. We didn't even actually touch it. So same thing here. If we can push through 44.18, our target really is going to be 44.54. However, if we round back to the downside, we have a support area right here at this 43.49 to 43.54 area. However, if we look at the Qs, and we'll zoom out here to see the full effect of this, the Qs are actually far more bullish than futures and SPY is. If you look at it here, we actually broke our bear channel that goes back to the last day of June. Now let's zoom out and really look at what we're seeing here. This looks like a massive bull flag that just broke out to the upside. If this is the bull flag breakout to the upside, we could be looking at a move back to 380 to 390 into end of year. So with this breakout here, and we closed over our key pivot point of 371.3 supply, our next target is this double supply at 377.32 to 378.17. The one thing I will say this morning is that tech did not look strong at all. Tech actually looked fairly bearish. Going into this morning, prior to that big pop that we had, it actually looked like we could see a little bit of a retrace and a little bit of a sell-off. Tech was certainly looking far more bearish. I mean, we had most of big tech starting to drop. However, big tech found its bounce, and once they all found their bounce, it was off to the races to the upside. Now, going over to NQ here, same thing. NQ actually is sitting right at its downtrend and its bull flags breakout. So from here, if we can break through 15,408, that's that supply from right here on October 12th, then our target is 15,676. Now, again, I do look at this as a continuation candle, and I could see this continuing up. If we get a big drop, the 8 EMA is going to end up somewhere right around this 15,100 area. But realistically, 14,988, the 50 EMA, that should be ultimate support. At some point, I would be shocked to not see us come back below 15,000 to backtest some of these EMAs and maybe take out this supply. But for now, I mean, honestly, I only see upside. Now, again, while SPY has had quite the historic movement here, the last 7 days on the VIX has also been red. So we took out 14.83 supply here. Now, the way I'm looking at this, we have a resistance at 14.97 of our downward bear channel. Unless we get a pretty sizable move down on the VIX overnight, likely we break this bear channel, start to push towards 16.1, and more likely than not, that will bring the retrace to the downside on the rest of the market. Now, again, we could just kind of consolidate here. You can see we're kind of almost looking like a little bit of a bear flag. So this could fake break this bear channel before pushing lower. We do have to take into fact that this could be our bear channel right here to the downside. So if this is our bear channel to the downside, then you see we have far more room for potential consolidation before dropping. Overall, at this point, it's tough to bet against this market. I more or less expect us to see more upside tomorrow. I do think we'll get our 8th green day. Now, with that being said, Jay Powell is scheduled to talk tomorrow morning. He's doing opening for some sort of panel or something like that. And then on Thursday, he's also scheduled to, I guess, be interviewed during that panel around 2 o'clock. So, there's a lot of potential for some downside. We'll see what that brings. But overall, I remain bullish until otherwise proven. And I still think if you look at, this daily chart here, until we lose really the 200 EMA again, I see all these dips as a buying opportunity. And that's how I'm going to treat it until pretty much otherwise proven.